We're pleased to begin. Please welcome our keynote speaker, Mr. Yuji Yamashita, Principal Financial Sector Specialist at Asian Development Bank. Mr. Yamashita, the floor is yours.
Good morning, ladies and gentlemen. It is my great honor to deliver a keynote speech at WFC2025 here in Almaty, where the world's central securities depositories gather to shape the future of post-trade. I speak today as the person who leads the Asian Bond Market Initiative, ABMI, of ASEAN Plus 3, Japan, Korea, China, at the Asian Development Bank, ADB. Let me start my remarks by pointing out challenges and opportunities CSDs are facing now. In fact, CSDs worldwide are entering a new era. First, as we already discussed in the morning, shorter settlement cycles. Markets are moving toward T+1 and even real-time settlement. Also, expectations for 24/7 transactions are mounting. As cash payments become instantaneous, securities settlement faces growing pressure to match that speed. Second, new technology frontiers. Blockchain and other emerging tools challenge CSDs to decide whether, how, and when to adopt these new technologies. Possible digital ecosystem facing CSDs are very broad. Beyond just the materialization, we need to consider comprehensive digitalization and automation, including corporate actions and data flows. This is precisely the environment that inspired ABMI's work. Now, allow me to explain what ABMI did in the ambitious POC work called Project Tridecagon. In fact, our flagship initiative, Project Tridecagon, which means 13 countries, directly explored how DLT can overcome the long-standing frictions of cross-border settlement. As you know, domestic DVP settlement is relatively straightforward. A central bank's RTGS system connects with CSD's book entry system platform. Cross-border settlement, however, relies on a long chain of intermediaries, ranging from asset owners, managers, global custodians, and local agents, moving cash and instructions through corresponding banking networks. This adds cost and also introduces delay, typically T+2, and exposes participants to market risk, also and Hellstadt risk. Project Tridecagon tested whether DLT can support next-generation CSD and RTGS linkages, focusing on three key innovations. First, technology-forward experimentation, real-time programmable settlement, cross-chain atomic delivery, and smart contract automation for direct CSD to CSD connectivity. Second, separating DVP and PVP, a three-token model for foreign currency, local currency, and securities tokens, enabling simultaneous exchanges while respecting regulatory constraints. In theory, one might exchange a securities token and foreign currency token simultaneously. However, that would implicitly require a CSD to perform banking functions, something, unfortunately, current regulations do not allow. Therefore, currency exchange and fund transfers between economies must occur through the banking system, while securities and cash exchange remain in the domestic payment and settlement system. This design calls for simultaneous exchanges of 3 different tokens. Again, foreign currency, local currency, and securities tokens. Cross-currency PVP, where 2 currency tokens are exchanged, is already proven. However, orchestrating the simultaneous exchange of 3 tokens is entirely new and a true innovation of the project Tridecagon. From this work, we drew important lessons. Of course, DLT can process complex cross-chain works. Properly designed DLT enables easier upgrades, greater resilience, and strong tamper resistance. However, we also learned DLT is not a magical solution. First, building a DLT platform demands the same rigor and costs as any major IT system development. Second, law and regulation remain decisive. Smart contracts cannot override legal and regulatory requirements. Harmonized legal frameworks for tokenized assets, currency offshoring, and settlement with finality are essential. Also, finally, governance is the critical success factor. A private or consortium chain protects confidentiality, but only robust governance, such as clear division of roles, dispute resolution rules, uniform cyber security, prevents the weakest link from endangering the whole network. In short, Project Tridecagon reminded us that technology alone is not enough. Interoperability, legal coherence, and robust governance are the true enablers of a frictionless global post-trade ecosystem. The journey of ABMI does not stop here. The ABMI, through its framework called Digital Bond Market Forum, is identifying the legal and regulatory issues related to tokenized assets and examining the overall potential of the digital ecosystem, including the use of stable coins as a means of cash settlement. In addition, it is exploring the possibility of tokenization of carbon credits. These initiatives are highly valuable for CSDs as well, and ABMI aims to contribute to the advancement of CSDs through these digitalization initiatives. Before I close, let me express ADB's deep appreciation to Kazakhstan colleagues for graciously hosting this great event, WFC2025, and for its impressive capital market development efforts. It is my also great honor and pleasure to say that Kazakhstan is participating in the ASEAN Plus 3 Bond Market Forum, ABMF, as an observer. In addition, Kazakhstan is intensively drafting the bond market guide with a full cooperation with ADB. Once it is made public, it would work as a great milestone for the Kazakhstan's capital market development. We strongly believe these partnerships will strengthen regional connectivity and benefit every market participant here. Thank you very much.
Thank you, Mr. Yamashita. Dear forum participants, we're pleased to welcome you to the session of Executive Panel 1, which is held on the topic Diversification and Development of New Initiatives in the Post-Trade Industry. This session will examine how post-trade entities are leveraging emerging technologies, explore the challenges and opportunities presented by innovative developments, focusing on interoperability across jurisdictions, compliance with evolving regulatory frameworks. Now, please join me in welcoming our moderator, Mr. Bryan Pascoe, CEO of the International Capital Market Association, and all our panelists. As you're listening, if there's something you'd like to ask, don't hesitate. Just scan the QR code and send your question our way. Please welcome.
Good morning, ladies and gentlemen. And firstly, my great thanks to the KCSD team, to Adil in particular, and his whole team for the invitation to be here. It's a wonderful event and my first time in Kazakhstan, so this is a real opportunity. Let me introduce myself first before saying a few words, and then moving on to introduce the panelists and begin our discussion. So firstly, I'm Bryan Pascoe, the Chief Executive of ICMA, the International Capital Market Association. And today we'll be talking about diversification and development of new initiatives in the post-trade industry. A few words first, though, maybe about ICMA. I would describe us as the leading industry association and standard setter in the international bond and repo markets, where we also have a very preeminent role in sustainable finance and also market digitalization. We have over 630 members in 71 jurisdictions globally, so truly international, and we have members here in Kazakhstan. And we represent the entire market ecosystem, which I think differentiates us from many other organizations of our nature. And it's noticeable, I would say, also that we have a very large and growing list of members from the market infrastructure space, currently totaling over 70 on a global basis, including leading stock exchanges, CSDs, CCPs, trading venues, and platforms. And this community is certainly growing. This, I think, is very much reflective of the prominent and increasing role that FMIs are playing in the financial market landscape and the changes that have taken place and will continue to take place as we look ahead. Historically, I've been in the capital markets for over 30 years. I think post-trade activities were probably quite dry, process-oriented, transactional, and commoditized in many ways. But the industry has changed dramatically and will continue to evolve, and now very customer service-centric, diversified, integrated, and data-driven. And that's driven both by market-led initiatives, but also by regulatory initiatives as well, as we see the focus on market efficiencies, on reporting, on transparency, etc. As we look ahead, I think capital markets are going to become ever larger and even more complex. We'll see larger numbers of securities outstanding as markets grow. The bond markets alone now are $140 trillion equivalent in size. We know that the treasury market's going to grow, that European governments are borrowing more, and that regionally across the world, bond markets are seeing a lot of focus in terms of development so they can support long-term sustainable growth across the entire global space. So these are exciting times. But in addition to just the size of the market, there's going to be greater onus on managing and mitigating risk, increased need to manage and mobilize collateral, more pervasive regulation in areas such as reporting and transparency, as well, of course, as market efficiency undertakings such as T+1, and the push towards central clearing, which we're seeing in US Treasuries and which will also manifest itself in other jurisdictions and other markets in due course. So with all that taken into consideration and context, I think that sets the scene hopefully quite nicely for the insight and comments that we will hear from our market-leading and esteemed panelists on my left. But with that, let me introduce firstly Adil Mukhamejanov, who's the CEO of KASE. Prior, as you mentioned earlier, Adil, the chief executive of KCSD as well. So clearly some very interesting perspectives from your side. Secondly, Mr. Bandar Alkahail, who's the chief of business development at Edaa. Thirdly, Willems, who is head of product management, global markets at Clearstream. Fourthly, Jesse Kagoma, who is the CEO of the CDSC of Kenya. And finally, Mr. Samsul Hidayat, who's the President Director of KSEI. Thank you, gentlemen. So with that, let me open with the first question. And what I would immediately notice within the market infrastructure and KSD space is that there's no one-size-fits-all in terms of the business model. Many are vertical, some are across the entire spectrum and multi-product, horizontal drivers, the governance, the organizational structure and the ownership. There's a great degree of diversity across the world. And as somebody who's not from that area of specialization during my experience, it's certainly very interesting, I think, to hear from your perspectives as to how your business model works, how you fit into the domestic and international financial ecosystem. So perhaps, Adil, I can turn to you first to talk a little bit about how KCSD is organized within the context as well of the stock exchange and the financial ecosystem here on the ground.
Yes, thank you very much for your question. To bring you into context, let me start from in Kazakhstan, KASE Group, our specialty that we are multifunctional, the only in Central Asia multifunctional stock exchange, because we, with our subsidiaries as KASE Clearing Center, we have a good portion in KCSD, and in this group of companies we support the whole cycle of movement on the capital market, from listing, trading, clearing, settlement, and post-trade. We support the 4 core markets. It's equity and bond, money market, foreign exchange market, and derivatives. Of course, all our system and all our process and procedures are in line with the international standards. What's the important to mention that in this group we have KASE Clearing Center, which was last year in 2024 received and recognized by the National Bank of Kazakhstan and received special status as a systematically important infrastructure organization. It's very important, and it's responsible also for the stability in financial markets. During last years, our clearing center received and went through operational certification. We've got this year credit rating, which is 1 notch less than our sovereign rating, and it's BBB-. We received the approval from Thomas Murray and other esteemed organizations. And the main idea that in whole KASE group we support the whole cycle of financial instrument life, from a burn till to its death. And as I said, our main goal right now to support and try to align to all international standards. So I think it's make it clear how we work.
Thank you very much. And perhaps with that I can turn to you, Bandar. I know that there have been some exciting developments in the Saudi capital markets of late, and clearly the infrastructure space is an extremely important part of supporting that growth as we look ahead. Can you talk a little bit about Edaa and your structure within the broader group?
Of course, sure. Let me start by maybe saying the structure of Edaa itself, which is the Saudi CSD. Edaa was part of the Saudi Stock Exchange, like many other CSDs in the world, until end of 2016, when Edaa was established as an independent company fully owned by the exchange at that time. But then later in 2021, Tadawul Holding Company, the group was formed, which owned the exchange, Edaa, the CSD, and a new company called Maqasa, which is the CCP, and another company called WAMUD, which is like the solution arms of the group. At that time, in 2021, for the first time in Saudi, Maqasa started to do the clearing for the cash market. Edaa continued to provide the CSD settlement, safekeeping, and registry, basically the main core CSD functions, in addition to a few added value services such as paying agents for cash distribution and corporate action processing. This was in early 2021. Later on that year, the group was listed on the stock market. The whole group was listed. When it comes to business model and operating model, Edaa, or the Saudi CSD, before 2017 was a T+0 settlement cycle. In 2017, we converted to T+2. Obviously, now we are working on T+1 like almost every other CSD in the world, assessing if there is a need to move to T+1 or maybe T+0, even back to T+0. At the same time, we've also introduced a couple of new initiatives. So the Saudi market is a segregated accounts structure, but 2 years ago, we introduced for the first time omnibus account structure, mainly for the debt market, for all type of investors. And early this year, we've introduced an omnibus account mainly for asset managers. And this is for all traded securities. This is some of the recent changes to the operating model in Saudi. At the same time, we've also done a lot of, I would say, collaborations and connectivities with other CSDs, opening the market to foreign investors more and more. Currently, foreign investors can access the debt market with no ownership limitation, and all type of foreign investors can access the debt market. The QFI, or the Qualified Foreign Investors regime, has been eased by the regulators, ease of access, less documentation, less requirements to enter the Saudi market. And as you rightly said, there is always a lot of development going on in Saudi.
No, exciting times, I think, especially with the new legislation as well from the central bank and the securities regulator on netting and how these markets are going to open up. So infrastructure clearly is going to play a huge part in ensuring that both international and domestic participants can be active and grow there. Jana, over to you. I think everybody is very familiar with Clearstream. You need no introduction, but maybe the organizational structure will be of interest for people to understand a little bit more.
No, first of all, thank you very much here to the organizers to welcoming Clearstream as well. I mean, I've been coming to Kazakhstan for more than 20 years now, so for me this feels a bit like a homecoming here. So first of all, a big thanks to the organizers for the perfect job they've done so far. As to your question on how we are organized in Clearstream and where we sit with our network organization, as you know, Clearstream is part of an exchange group. In that sense, we're not very different than Edaa. But then there again, the governance is indeed a bit different. We're an exchange group which is then in itself fully privately owned. Many exchanges, especially in emerging markets, there tends to be still a big participation of the public sector, which is not the case in Clearstream and in Deutsche Börse. So you have a very interesting situation that Clearstream being both in CSD and in ICSD, we are the unique place of safekeeping of one of the most valued securities in the world, the German Bund. Well, basically the German government trusts its debts to a fully 100% private organization. So it shows a bit that while we all part of this CSD and exchange world, sometimes the colors and the governance can be widely different. But that in general doesn't impact the mission statement that we have as a CSD/ICSD, which is not very different than the mission statements of my colleagues here on the podium, which is essentially making sure that the protection of the investor interests is at the top of our priorities. Once we have ticked that off, making sure that the investor protection is ensured to a maximum, we have then that open space where we can provide different types of services. That depends again on the commercial appetite of the CSD, jointly or conjointly with the exchange group where they belong. So in Clearstream, an 100% subsidiary of an 100% public quoted organization. Deutsche Börse as an exchange operator in itself is a publicly quoted company. But the overlaying layer of whether you are in Europe or whether you are in a market infrastructure outside of Europe is that you're bound by what your regulators allow you to do. We see convergence there globally as well. If you look at regulation in Europe, in essence, it's not that very different of regulatory environments in the US, in Asia, and so on and so on. So from an organizational setup, it's an interesting space. It all depends on how local governments, central banks, and Ministry of Finance view their markets. But then the result of it, whether your setup is A or B, the end result on providing that investor protection and additionally value-added services overall is not very different, depending on your governance and your setup.
Thanks. Yeah, interesting, as you say, the privately owned, it's a different model that we see to many parts of the world, and I guess the size and scale of Clearstream along with Euroclear kind of dwarfs probably a lot of else what is happening in other jurisdictions.
Yeah, but if you look, I mean, smaller CSD, bigger CSDs, ICSDs, if you strip it all down, you always come back to the same, 5 core or 6 core activities that they need to perform. So the rest is, like you rightfully said, the rest is just scale. Yeah. But the governance and the regulation on top of it steer a bit, but you always come down to the same principles.
Yeah. Great, thank you very much. Moving on to Jesse, can you talk to us a little bit about your operations in the Kenyan market?
Thank you. So speaking from the Kenyan market, and when we speak of Kenyan market, we also look at the Africa perspective market structures. The Kenyan market as it is, and we call it the gateway to East and Central Africa, it's a privately owned depository and has no government involvement. The model of the operation is a bilateral model. It's still a small market, I would say, compared to the big market. As far as the settlement cycles are concerned, I think the last 20 years in existence, we have moved from T+5 to T+3. Currently, as we are following the global trends, the market is moving towards the T+1. But currently, the market is still doing what you call accelerated trades. Locally, we are able to settle T+0 for the local investors. But when we have a counterparty being a global foreigner, now that transaction moved to T+3. So we are looking at to formalize that cycle to a hybrid model. And the hybrid model is because most of the global custodians who we speak to, they have discouraged us from moving to T+1 because of what they fear as the trade fails, because of the processes involved between Kenya and the rest and the far world, just because of different time zones. So we are very careful not to rush the whole market to T+1, but we are also trying to be on the move to T+1 by trying to have a hybrid market where you can have two multiple settlement cycle, T+1 and T+3. Now, looking at what we do for the market, and especially for the East African market, we as depository for all the equity in the current, in Kenya, so we support the Nairobi Securities Exchange. We also do depository for the corporate boards. We are not doing any government boards because the Central Bank of Kenya has its own depository for that matter. I know it has been a recommendation by World Bank to have the depository try to include the government boards in the same, but that has taken a long process, knowing the government how it works. We also, the custodians for the market, we enable the transfer of the security between the depository. So we have what we call interdepository transfer. You can buy security in Nairobi and you're able to transfer those depository to, those security to either Tanzania, Uganda, Rwanda, or the rest of the depositories in the region. We also very much keen to support other markets in terms of other industries in the market. We have realized other industries that are not properly managed and the securities at risk, such as the credit union industry, what we refer in our region as SACCOs or cooperative unions. They have many securities, but they are not in a proper depository or a central depository. We also now focusing and trying to get into that space and try to include them in the other depositories so that we can ensure the security of their securities, of their assets. So we pride ourselves to be a market that's ready and willing to copy and follow the global trends. And as far as the DLT is concerned, we are looking at how investors can be able to access the market without going to a broker or through a broker. And it's a process that's very much in progress. The Kenyan depository currently is in a process of acquiring an upgraded system, a system that will have AI capability and be able now to get the market or decentralize the market so that we are able to, to access the market without moving to stockbrokers. So basically, that's the Kenyan market, and we are very, very much into know of how the global market is moving, and we are moving towards that. Thank you.
Thank you very much. Interesting to hear there about your organizational structure, but also some of the initiatives that are your priorities right now. And I guess tracking global trends and best practices is a critical element of moving ahead in the right direction. So thanks for that. Finally, to you, Samsul, from the Indonesian perspective, can you let us know how you're organized and what your business model is?
Thank you, Bryan. First of all, thank you. I want to express my highest appreciation to Kazakhstan Central Securities Depository for holding this remarkable event. And please let me give you a brief explanation about the evolving of our CSD in Indonesia. As the sole Central Securities Depository in Indonesia, we are doing our core function is as central custody and also the securities transaction settlement for the Indonesia capital market. And it's including the securities registration, administration, depository withdrawal, and also reconciliation. And our CSD also manages the corporate action and all the corporate action activity administered up to the investor level. So we are doing down to investor level to give the service. And we recognize the growing expectation from the market and also from the government for us to diversify our services beyond our core services. And since several years ago, maybe we already start to differentiate our service by providing some other services beyond just custody and also settlement institution. Currently, we are a give service for issuing single investor identification, and also we give a service for doing
electronic shareholder general meeting of shareholder. We work together with MKK as our provider, and also we are providing the platform for investor to monitor the investment balance and movement. And also, just lately, last year, we launched a product that we can set to manage QIC data and document for investors, so it will be easier for our stockbroker to in the process of investor onboarding process. And another area that has becoming of our core services, we provide a platform for post-trade processing for mutual fund product. And it's becoming one of our core services right now. And considering the function and the benefit of this product, right now this platform has been used by not only in the capital market area, but also for public housing and insurance companies. Our company is also exploring actively exploring the opportunities to support the global market, and we are in the process also currently to provide to be a local operating unit for legal entity identifier, and all our business model is set following the IOSCO and PFMI standard. In general, our CSD in Indonesia provides similar services to other central securities companies in Asia Pacific region, while reflecting the unique regulatory framework by following the market need of Indonesia. And I believe also in my personal perspective that almost all CSD across region have diversified their services to respond to local requirement while remaining aligned with international standard, and also strengthening their key role as the key infrastructure to support the global capital market. Thank you.
Thanks. So very clear, I think, that there are a broad range of different organizational structures and setups there. Some really insightful comments, and thanks for that. I would just mention, the Slido is open for questions as well. We already have a number coming through. I think we might need to extend the panel to 2 hours to cover all of them, but we'll do our best to focus on the important ones. But let me talk now a little bit more on diversification in terms of the business models and how you're adapting to change in the industry. We're seeing new requirements, I guess, on infrastructure. Market structure itself is changing quite dramatically. I think on the international scale, the theme of non-bank financial institutions, market-based financing is a big one, but certainly market structure is changing. Regulatory environments, fast moving as well. So looking forward with all of that as a backdrop, how do you see your business needing to adapt and diversify in many ways its product offering to keep up with those changes? Let's stick with the same order. So Adil, over to you first.
Yes, thank you very much. I think that it's good to start the trends that we see in the market. One of them is rising demand for the commodity derivatives. Another part, it's technological trends. I mean, the obvious and already raised points of the trendy things like DLT, AI, and we see how cryptocurrency provides 24/7 trading access. We see as a classical exchange extending hours for the services too. We see how the retail through the mobile apps getting access to the markets for the ETFs, CDS, and we see new instruments, demand for the new instruments, as already mentioned, the carbon credits, and I think that's only part of them. But we see as opportunities and challenges from this trends, and for the these 3 years, from 25 to 27, we approved the strategy. There are three main streams on it. First one is to improve our core business. As we already a good one, it's money market FX and government securities. Of course, to continue support our ESG achievements. The second point is providing new products and new services. For example, on our KASE clearing stream, KASE clearing center, we starting from this year providing additional service, CCP services for OTC FX market, and there is a lot of demand for these services. We providing such services, we provide also raising the liquidity from FX and keep it liquid from the organized market and OTC. Some additional products based on the demand from the market and based on the global trends. And the third stream of this strategy is internal and technical operations improvement. So we're trying to decrease our reliance on the legacy systems. We are preparing some R&D initiatives to approve on our board, because it is a very long list of ideas based on the AI, based on DLT, and what we strongly believe that technical innovations and technological improvement can shape the capital markets too. So we're trying to be on the summit of these trends.
Thank you. Bandar?
Yes, hi, sure. Diversification, I think it's a very important thing. So we have many initiatives, a new strategy to diversify our business, our revenue from mainly the main market. So last year, for example, we started with data monetization. As they say, data is the new oil, and as a CSD, we are the golden source of a lot of data. And the group had a data monetization program, so we started to work on selling some new enhanced reports, analytical reports, not just to issuers or brokers, also to investors. That's one way of diversification. At the beginning of this year, we've launched something called Edaa Connect, which is a fund distribution platform for the first time in Saudi. And this platform, basically, it's something new business for us as a CSD. It creates e-wallets for investors, link all investors to all mutual funds with a straight through processing. The platform was launched beginning of this year, and we see a lot of interest from fund managers. We already have around 15 asset managers with 30 funds registered already in the platform, more than 2,000-3,000 investors. There is a lot of enhancement developments. This is one way of diversifying our revenue away from the trading and the cash market. The other thing somehow related to the market is recently also in May this year, we introduced something called OTC settlement, which is basically direct settlement for government bonds. The reason for that was the lack of liquidity in the secondary market for government bonds. Yeah. And for Saudi Arabia, I'm sure as you may know all, it is very important now to facilitate issuances of government bonds, local government bonds. And it was a very successful launch this year. And as a result of that, Saudi Arabia fixed income market was 2 weeks ago included in the watch list of JP Morgan emerging market indices with a 3 to 6 month inclusion time, which is a very good achievement, to be honest, an important one for Saudi Arabia. As I said earlier, there are still many other strategies we are working on. You mentioned earlier the netting opinion, the new regulations from the central bank. I think this is a very good opportunity for us, and we started to explore collateral management services, other things, to just, again, to diversify from the core businesses that we are working on.
Yeah, thank you. There's a question, actually, if I could just come to you, because I think it's quite interesting, on the movement to shorter settlement cycles, and it was targeted to you. Given the different weekends and working days in Saudi Arabia, do you have a plan, for how to manage some of the challenges that might face? I think the entire move to T+1, frankly, when you look at different time zones, has thrown up a whole amount of different challenges in terms of getting processes aligned and pushing instructions through the system more quickly and having to adjust, I guess, to the entire process. But I think within the Saudi context, it may be even more kind of fundamental and structural because of the, the different working days. Could you provide a very short perspective on that?
Sure, of course. And to be honest, I like that you ask if we have a plan. You didn't ask if we are going to change, because calendar days is not something that the CSD or the exchange can decide. That's why I like your questions, if we have a plan. And yes, as a CSD and the exchange, of course, we have a lot of plans, and to be honest, work around, we are doing our best to, because we understand that this is a challenge, especially that we are opening the market to foreign investors. And there is always this difference in working days challenge. But again, as I said earlier, this is a government decision. Nothing yet announced. There is a lot of discussion here and there about the importance of changing the working days. But from a CSD perspective, and especially that we have links with Euroclear, Clearstream, we have a lot of foreign inflow investment, so the difference in working days is causing a lot of challenge to us. So back to that settlement cycle, Saudi was T+0 before 2017, but because we were opening the market at that time, we had to move to T+2, change to T+2. Now we are moving to maybe to T+1. But again, someone raised this question in the previous panel, which is, this will cause a lot of challenge, to be honest, to the market participants, more than us as a market infrastructure. We've done the assessment, we are ready already, but the problem is, will the market is ready? This will cause a lot of challenges to reconciliation, pre-matching, settlement for custodian, especially with, back to your point, the difference in working days. And the way we are doing it, we are trying to be more flexible with custodian, with the local custodian market participants when it comes to settlement, because they work on Friday and then we work on Sunday. For example, we've introduced 5 settlement batches. We used to have only 1 settlement batch, which caused a little bit of a limitation to the market participants. So with these additional settlement batches, now the market participants, they have a little bit more flexibility when they trade to settle early Sunday. The other good news is most of global custodians, they already have a sub-custody or they have a presence in Saudi. So they have an on-ground team who is working on Sunday. These are few things that we are working on and already implemented as a workaround to reduce the risk of the difference of working days, till maybe one day the whole working day will be different in Saudi.
Thanks. Interesting you mentioned introduction of new batches. I think actually within the European context, that is a feature of the discussion also around the move to T+1 because of some of the challenges that we're seeing there. But in a broader context of Europe, from a Clearstream perspective, Jan, priorities, diversification, changes in business model to adapt to client needs?
From a European point of view, there's a couple of interesting observations when it comes to diversification. What we see is that if you have the ecosystem of global custodians, ICSD and CSDs, sometimes it's getting very blurred about who is whom now. CSDs more and more start to act like ICSDs. They become their local market ICSD, and then, for example, in Poland, the Polish CSD offers to local Polish bank a whole range of international access points as well beyond their home markets. You have global custodians that basically also behave sometimes as a CSD, especially when it comes to digital assets, whereby they will, in their digital asset products, consider themselves as the unique place of issuance. And ICSDs are becoming also, on the one hand, global custodian somehow. Yeah. Sometimes the service offering of an ICSD and a global custodian becomes very, very similar. And ICSDs then become also CSDs, especially now with all the topics around capital markets union in Europe and consolidation of market infrastructures. So if you look at the diversification, it's not only within those three types of organizations that organizations start to offer a wider range of services, but the nature of the organization itself is getting very blurred. I think that's very interesting, especially when you're an asset manager or a bank or a broker dealer looking for post-trade services. Your choices become bigger, and you can really fine-tune the type of service that you want, depending whether you're gonna hook up with an ICSD, a CSD, or a global custodian. Of course, the main factor that still makes a big difference is the credit facilitating character of the organization. ICSD and CSDs are bound under CSDR by very strict conditions to what extent you can give credit facilities to your customers. Global custodians are less bound to CSDR and can basically offer that single one most important product that the post-trade provider can offer, which is credit. Sometimes we forget about it. We talk a lot about, you know, asset servicing capacity, digital assets, you name it, but the credit providing facility sits somehow on the top of the pyramid. So diversification, we're not the only ones who are doing it. Everybody is doing it. It just, although we have the diversification products and services, we all start to behave a bit all like the same organization, being it either a CSD, an ICSD, or a global custodian. But at the end of the day, it's the buyer of the services that will benefit from it. He gets a much wider choice at often also a much cheaper price.
Yeah. No, I mean, Europe's an incredibly interesting landscape right now because of, you know, the push to more, I guess, consolidation around infrastructure, but already you have, you know, a high degree of integration across product, as you've already said. So, you know, I think that's really going to be an interesting area to watch.
And it debunks a bit as well that idea of European capital markets, especially in the post-trade sphere, not being efficient. I do think they're very efficient already today. You know, we often then compare to neobanks and neo-brokers, and they will say, look how technology advanced they are, and see how conservative the European post-trade world is. But if you look then, basically, who are those neobanks and neo-brokers using for their post-trade? They come back to us. Yeah. So if our services would be so backwarded or backdated or ancient, I don't see how we would be able to be a prime provider for those fintechs, neo-brokers. So I do think that's something that there are a lot of things that we're doing very, very right in post-trade and in post-trade in Europe in particular. And if we look already to the cost base, the overall efficiency, also cross-border, today in 2025, it's already a very, very different story than 10 or 15 years ago. And that strive to efficiency is going to accelerate further. So we as a community as well, sometimes we have to debunk the idea that things are not efficient. I think in many cases we've already advanced tremendously.
Okay. Thanks for reinforcing that point very clearly. Yeah. We go from a very international environment there. Jesse, perhaps back to something a little bit more localized. How are you seeing the pressure from customers to diversify your business to respond to new needs from a Kenya perspective? And then we'll obviously hear from the Indonesian side as well. But you, Jesse, you first, please.
Thank you. I think from the African challenges are different from the developed markets. And one of the key risks that we face in Africa, one is the low revenues that are also capitalized by low margins for those revenues. High cost of technology, it's very high. And we are now looking, our diversification models has to try and solve those few issues. So one of the things that we're seeing and we are looking at is, of course, trying to see how we can work with the technology partners, looking at a model that's favoring both the provider and the person that's receiving those services. And in that case, we are looking at how we can structure the cost of technology into what we call a revenue share kind of a model, so that we see when the volumes are high, at least the service provider will get to benefit. Then when the volumes are low, at the same time, the provider or the service provider will have to share those risks. So those are the kind of diversification we are looking at, and upgrading the system. That's a major key item that we are looking into it. The other thing is when the markets are high, it's majorly because of interest and demands from the foreign investors. In Kenya market, we are lucky. At least the trades or the transaction are shared between 50-50 between foreign and local investors. So we have to be very careful for the two segments. For the foreign investors, for us to be able to de-risk from when there is a net outflow or net sale from the foreigner, we have to de-risk the market from that. And one of the innovative way we are looking at is now looking at the east, because most of the foreign investors in Kenya, for example, are coming from the west. So we are doing a lot of roadshows in the east to see how we can attract. So when the foreigners are, or the west are selling, at least we have east is buying. So we are trying to balance into that and see how that works. Of course, it's an experiment we are trying to do, but at least there's something we are trying to see whether we can be able to solve that issue. As for the local investors, we've seen a new generation, the Generation Z and the millennials. They are very demanding in how you are giving the service to them. Most of these guys, they are looking for what we call atomic settlement. And you have to be very careful. A market that also has 50% foreigners, you have to be very careful on how you model their interest and make sure that you're also not, risking market from, risking the market by disadvantaging the foreign investors. So what we are trying to do, we are looking at trying to settle the transaction for locals through what we call the mobile wallet, the so famous M-Pesa transactions. So when you can be able to buy securities from the market and be able to settle almost the same second. So for these guys, the young generation, because they are trading in Forex and cryptocurrency and all that, they are getting those benefits from there. So what we try to do locally now is also to see how the securities or the shares in the market can also be settled through such kind of transaction through the mobile wallet. So those are the kind of diversification we are trying to do to see how that can work. Other things that we are looking at is data has been what we call an idle asset. And most of the CSD have not capitalized on the data. As CSD in Kenya, we engaged a data specialist from UK to see how we can package the data and be able to sell to the likes of the people who normally buy the data from the security exchange. So we have at least tried and we have seen what we can sell from the post-trade, and see how much we can make from that. So we are progressing well. At least already we have one client that we have onboarded, and it's looking like this a new area that we are going to capitalize and diversify and see how we can get a lot of money from the data management and data sales. So there are quite a number of other diversification that we are looking at. Previously, block trades was an issue in the country, but we've seen investors coming together and forcing a transaction through block trade. So we have incorporated block trades into the market, and investors are able to come together. If they want to buy a big chunk from a particular counter, they're able to come to the market, and we organize them through what we call block trade, and they're able to exchange the stakes between two different shareholders. There are quite a number of other things that are also happening. That include tokenization of the market. That's a new thing that's happening, and we are looking at that. The regulator has published what we call virtualized asset regulations. That's what will now guide the whole market as we move into that space. And we are happy the government is willing and ready to move with that. The other thing that's also happening in the market, some investors are shy of to come to the market because of the risk of price going up and down. So we are encouraging the brokers, at least each broker, to have what we call an omnibus account. And what we want to, or what we are trying to do, and we have seen a success in two, is what we call corrective investment scheme through equity-linked units, where a number of investors can buy into, form a unit through a broker, and they're able to come to the market and buy diversified kind of portfolios, so that when the prices of one is high, at least the other one is it's giving good return, and they're able now to mitigate again the risk of up and down between those securities. So those are the kind of diversification that we are doing in Nairobi, and we are hoping we'll be able to replicate that to the rest of East Africa. Thank you.
That's great, thank you. You're very busy, clearly there, and lots of forward-looking initiatives taking place. Interesting to hear as well that 50% of the market has foreign involvement. So I guess that's a broad customer base to deal with. Samsul, from a KSEI perspective, how are you adapting?
Thank you, Bryan. Our government and also our company is seeing a growing need from day to day to more efficient, also secure post-trade processes, because we realize that it's driven by the increasing complexity of the market currently, and also the higher transaction volume that we are in Indonesia market. Lately, we have in the last 5 years, our transaction has been double, even triple, and also like we hear from other speaker, the rise of digital asset is also something that we have to consider, and more flexibility with different type of asset. We also realize that investor and financial institution and the whole our stakeholder want something faster, transparent settlement process and cycle, and also more flexibility with different type of asset handling. In Indonesia, there have been several key changes in the capital market structure, particularly the convergence of financial market and technology, which encourage the integration of traditional market into digital financial asset. And lately, in addition, our government just make some changes in our capital market structure by allowing mutual fund to purchase offshore product, and also in offering more flexible product for foreign institution. And from KSEI perspective, currently we are exploring the development of ICSD linkage to support the growing needs of Indonesian investors to active in foreign transaction securities. This initiative is driven by the fact that the financial landscape has become more interconnected between us in the global market. From regulatory perspective, Indonesia Financial Service Authority has rolled out new regulation covering areas such as financial derivative, dematerialization of securities, and digital financial asset. Of course, additionally, we and other CSD are also focusing on on some critical areas, including ESG, data protection, and cybersecurity in response to the rapid pace of the technological change. Looking ahead, we think that it's important for CSD to keep evolving. We need to stay flexible and expand our service to cover new financial product and asset type to ensure smoother trading, better market access, and comply with regulation. That's all. Thank you, Bryan.
Thank you very much. I do want to ask perhaps a little bit more of a specific question around the applications of some of the digital initiatives and innovations that are taking place. How DLT is being applied perhaps on some examples, how AI may be being applied as well. I guess from two different perspectives. One is how do you become, well, although they're interlinked, how do you build competitiveness in terms of your product offering? But also, how are you protecting your business against some of the potential changes to the traditional post-trade services, I guess, that new technologies are bringing? So, Samsul, maybe I can stick with you on that one. And if we can go through this reasonably quickly, please, because I do want to touch on interoperability a little bit as well at the end, and we are tight on time.
Maybe the topic has been discussed before with other speakers, and for us in Indonesia, we are not coming with new technology, especially for AI and DLT. And the thing that we are using currently is only what we call it the big data. We are using what we call it the new technology to supervise our market supervision in Indonesia. So in general, we can say that we are still exploring all opportunities to use this new technology. But like you said, we have to be very cautious here in using the new technology, because by using new technology, we will exchange all the ecosystem in our capital market, and it needs more consideration, not only for our side and business side, and also from the government side. Thank you, Bryan.
Thank you. Thank you. Jesse, perhaps, do you have any perspectives on that from your side?
Yes, and I think moving into the new technology and looking at AI, DLT, and all that, it's a must. All the markets have to try and incorporate that. So in our market, we are trying to see how we can have the synchronized ledger, shared ledger for some of these accounts, because we have to decentralize the market. And the more we move to atomic settlement, we need to have a way of we secure the accounts of our investors. Because when you talk of a DLT and AI, then you increase the risk of cybersecurity. So we need to get away, or we are trying to see how we can use what we call cryptography and algorithms to secure the assets of these customers, so that whenever there is a trade, doesn't matter where you are, but at least you're able to be secured and you're able to move with the transaction. And at the same time, the depository will be safe and will be able to secure the asset of the market for that, because, I mean, the rest of what we said as a CSD is just the trust, nothing else. So we have to make sure that we are able to secure this asset through the various, various methods to ensure that cybersecurity is kept at bay. Thank you.
Thanks. I think that's a very important point. Using these new technologies brings in new risks as well, especially around cybersecurity. So that's a whole different dimension. I'm sure that's going to be touched on in different panels. Jan, I'll leave you to last, because I want to maybe tie that in with the interoperability point with you on the technology usage and some of the things that you might be doing on a broader basis. So, but Bandar, could I come to you on that question?
Yeah, of course, sure. Obviously, AI and DLT are two different things. AI, there is a lot of implementation we have when it comes to efficiency, reporting, and other things. However, when it comes to DLT, we are just exploring like a new DLT and blockchain. But to be honest, at a very high level, we are replacing, enhancing our existing infrastructure, our own systems, our ISO standards, everything. We have not yet done anything when it comes to DLT or blockchain. And the main reason is we ensure that there is a proper governance, proper control. I remember Mark's comment earlier in the session where it says, it's not about the technology, it's about trust. And DLT, the whole concept of a blockchain it's another tool to authenticate the transaction. So, which means there is no need for a CSD. And to be honest, that's why I'm seeing now a new models where they are saying CSD can be a node into the blockchain. Like there is a new initiative in Saudi, for example, to implement repo transaction into blockchain. You know, I like the idea to implement blockchain on a specific product,
Right.
but talking about just convert to DLT and blockchain just like that, for me at least it doesn't make sense. You need to be open, yes, to explore, to be there. And probably, to be honest, the main reason people are doing this because they understand this is a direct threat to their business. That's number one. Second, it's because it's a new technology. Yes, you need to be open, but it doesn't mean you have to adapt just like that, just because it's a new technology.
Yeah. No, it's interesting. I mean, I think it needs to be adopted, DLT in particular, by the entire capital markets ecosystem to make sense of it. And, you know, your point around pilots, exploration, I think we're still very much in that phase. We do a lot of work on trying to bring the industry together on these points. You can't do it in isolation, I guess that's the point. From a Kazakhstan perspective, any good examples, Adil, that you can share with us?
Yes, thank you. I absolutely agree with these thoughts, and just for to addition, in Kazakhstan Stock Exchange, we exploring and discovering both streams and DLT and AI. Talking about DLT, right now, National Bank of Kazakhstan with our regulator are finalizing the legislation framework for the RVA and the whole architecture of the system. And at this level, we, with the regulators, with the Center of Securities Depository, trying to build the right architecture which will support, because I absolutely agree that efficiency not only point that we have to look on the system. We have to see the whole process from the beginning, KYC onboarding, product development, building value for the customers, for the market, and the settlement at the end. And usually when people trying to implement something just as a hype, it's not solve and not bring any value for the customer. So at this level, we're trying to understand and build the, as I said, system that will support product development, the solving the needs, exact needs of the market participants. So there are a lot of initiatives, but we're still discovering the right way. And talking about the artificial intelligence, absolutely agree. It's a different animal, but there are a lot of points or a lot of places when it can be implemented. And we see three main areas: is onboarding and monitoring of the transactions and the client's risk management, a big potential. And some ideas of the LegTech, which we're trying to implement in Kazakhstan Stock Exchange.
Thanks. That brings me back to you, Jan, and I think it ties in very well, you know, with this need to be standardized and consistent across markets to build scale.
Yep.
And obviously, as one of the major international players, I guess, you know, Euroclear and DTCC probably been, you know, similar in footprint, or if not footprint, in size. You know, I guess you stand at the center of the ability to build interoperability, to encourage the industry to move together around consistent standards and approaches. How are you working maybe with your, you know, friendly competitors, let's say, to drive some of these standards and ensure that we can get that interoperability going forward?
It's a very good question, because, you know, over the last 5 to 6 years we've seen hundreds of initiatives by various organizations, Asian banks, custodians, ICSD, CSDs, and there's something very repetitive there. There's technology, there's one issuer, and then there's one investor. It nearly becomes a private placement type of cycle or procedure, where all of a sudden someone makes a big announcement. Okay, we launched a digital security. This is the technology. Apparently, then there's one investor, but it all remains within one and the same organization. And there's dozens or hundreds of examples of these. And thus, of course, you don't create scale. You remain in a sandbox type of environment, and it's a repetition of a lot of sandboxes, so it becomes a very big playground. And I think as an industry, we just have to look back a little bit on what SWIFT has done over the last 30, 40, 50 years to bring standards across very different organizations. Whether you're a CSD in Indonesia or in Kenya or in Japan, your MT541 and your MT543 will look very, very similar. Although underneath your market may be very different, but SWIFT at least has created some type of layer on top of all the organizations and brought standardization into our industry. I think very quickly we will see the same with digital assets and digital securities. Clearstream itself, a part of all the many markets that we cover, well, the main product, and that's where we started with 50 years ago, is the Eurobond. Together with Euroclear, that's around a 15 trillion market. So there very quickly, Clearstream realized if we want to inject digital technology into the Eurobond, it doesn't make any sense to do that alone. So from the start, we have reached out to our peers in Brussels to see, look, rather than trying to reinvent here the Eurobond wheel ourselves with a technology which is purely a Clearstream one, why don't we put our technologies, why don't we look at each other's technology and see how, for example, we can digitalize the Eurobond world. We work since more than 50 years with a pretty very solid procedure around global certificates. That's already a very low-hanging fruit, how things can be digitalized, and rather doing that solely from a perspective of one ICSD or the other, let's do that jointly. And there's quite a lot of exciting things that are coming to the industry when it comes to digitalization of the Eurobonds, for example. But that's a prime example how I think we will see collaboration across CSDs, ICSDs and global custodians, is trying to replicate a bit that unifying factor that SWIFT has achieved for our industry 50 years ago. We need to find something unifying as well for what's coming up and coming our way when it comes to digital assets and DLTs. Otherwise, we're all going to stay in our little sandbox. And it's going to create just a lot of very interesting press releases, but tangibly for the investor, things will remain the same. So let's look at what SWIFT did, and let's see how we can replicate it for the new world of digital and DLT.
No, and I think that's great that you're teaming up because, again, you have to create scale and consistency. I think the ICSDs really taking the initiative on that will mean that market practitioners will follow, and then that permeates around, other regional markets as well, and we create more a global community on, focus points that can really drive efficiencies. So we're just about out of time, but Adil, on a similar point, because there was a question that came in, as the largest economy in the region, how do you see maybe the Kazakh infrastructure players in terms of other opportunities in the region or integration and engagement with regional partners? I know it was mentioned in Adil's comments at the start with some of the initiatives that are on the go, but maybe you can just touch on that in 30 seconds or so.
Yes, as a short, we are very supporting all this interconnection with the whole system, and we are ready to continue discussions of partnership for building such interoperating platform at every level, at level of the settlement, level of the clearing, and the level of the trading itself. And we have a good initiatives from the KCSD with the successful stories of building such relations in the region.
Okay, many thanks. So I think we're out of time. Great insights from all of the panelists, some international perspectives, local perspectives, different stages as well, I guess, of business development. So that was very insightful for me, and I hope for the audience. So thank you for listening, and many thanks to my panelists for their comments. Thank you.
Thank you. We invite our speakers and moderator to take a group photo on the stage, please. And now, by tradition, participants are awarded memorable gifts from the organizing committee. Let's take one more photo. Thank you.